Hi, good morning. Good morning, everybody. It is Tuesday, May 21, just coming on 3 a.m. over there on the East Coast. And I know I promised I wasn't going to be doing any videos this week, but as we're getting ready to travel, I could kind of use the distraction. So I wanted to get this in real quick. Here we go. We have again, a 314 point range for the month. As I've discussed, going over month over month over month, back years over years over years, you have stretched the upper echelon of where a monthly range goes. Your full moon occurs on Thursday. The full moon window is from yesterday, Monday, going into Monday of next week, if I am correct. May 23. So, yeah, going into the May 23, 3 days prior. So 20, 21, 22, 23 being the full moon, 24, 25 being your Thursday and Friday, and then Monday, holiday. So Tuesday of next week is when your full moon window closes. You have no range. Since we placed the low on May 2, we have no range whatsoever, zero range. We have gone 314 points and we have no range at all, nothing, no range. The only day we had any kind of range was on CPI day, 48.50. We have no range. Over on the spreads, today is day 15. As you see over here in red, failure, 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 failure. Again, you have no range. No range, very difficult to trade. So if you are going to trade, you may as well go out there with the calculated risk, which I'll go over here in a second. No range. And as you see yesterday, the 52.90, 52.85, $4.50, it failed. All we got down to was 43.02. We did not break down out of the 5200s. This needs to be changed. So bear with me. We did not. That needs to be changed as well. My apologies. Again, having been distracted a little bit over the last couple of days, didn't have that right. So again, here our lows. Yesterday, our lows were above 5,300. First time we've had lows above 5,300. We have not had a minus 1% day in 15 days. Not super incredibly significant, but you are getting to that upper echelon area, which I'll show you over here. Okay, with the powers of computers, we are correct now. So what I have here on your screen is the SPX daily going back 2 years, and these numbers that are highlighted are the consecutive trading sessions without a minus 1% move. Here we are going back to April of last year, 2018, up here when we hit the July highs in 2023, 27 prior to that. And I'm going to highlight that right there, this little space where we're at right here. We had 25 off of that October Israel invades Gaza bottom. We had 17 as we were going into the end of the year, start of the new year into February. And then most recently, we had 19 as we went in and placed our top over there in April before that decline that we got. And I'm just showing the Ichimoku cloud just for visual references. But as you can see up above, very extremely overbought, extremely, extremely overbought. Overbought means nothing. Oversold means something, but overbought means nothing. So again, this is not as significant being 15 days on the SPX. However, on the QQQ 15, you have not had a run as you have right now on the QQQ of this many trading sessions without a minus 1% decline for years, period, the end. So again, everything being in the QQQ, this is the place to be with it. And that was why when I was talking about this strategy, you can call it, as I shared there yesterday, Monday, Going into yesterday, I shared there in the top of the email, which we'll go back to here. It is speculative at best to even think that we are going to get a close down below 5,300. I can look where it is, somewhere up at the top. Mondays used to be rock solid tradition. February, March, April ended when we bottomed April 19th. So a red close on SPX below 53.0327 is speculative at best. Again, no events all week until NVIDIA reports tomorrow. And we still have not had the minus 1% day over there on the QQQ. So again, going back to how the strategy that I discussed being the martingale, you got to figure out how much money you're willing to risk total. Like I threw out here, $2,000. This example I'm showing only comes out to $750. Again, keeping it simple so that everybody is included. You can do your own math. Go on Monday, one contract, risk $50 risk, possible payout $450. If it doesn't work, you go get two for today. Two contracts, $4.50 credit, $100 risk. Now you got a 50 and 100. That's $150 you got out there at risk. 900 if you got that minus 1% day. Doesn't work, you go for 3 on Wednesday. Doesn't work, you go for 4 on Thursday. Doesn't work, you go for 5 on Friday. And you have taken yourself to a total of $750 maximum risk, where any one of these days works out. Any one, you've not only recovered the money that you lost previous going into this, but you have also achieved the accomplishment of having gotten ahead of the minus 1% day without the minus 1% day occurring in real time off of an event that you are not prepared for because you're busy or you have other things going on in your life. So again, coming on to here, that was the wrong chart and that was the right one. 20, 18, 27, 25, 17, 19. We are currently at 15. 15 is a very extended stretch, but again, we're not breaking any kind of records at the moment on the SPX. Coming back over onto the wider view, you are into your fourth green week on the QQQ, the IWM, SPX SPY. The Dow Jones is currently red on the week as the Dow Jones took a hit with that JP Morgan possibly considering retirement of Jamie Dimon. What I'm showing you here on the weekly are where your RSI 14 and your 5, but more so your 14s have been here just prior as you were going into COVID, here just prior as we went into this recent little 5% dip. 4 green weeks in a row. 3, pretty common. 5, it happens. The 9 and the 6, not only extremely rare events, but guess what? Both of them came off of October bottoms. And that was the reason why my wider view continues to be, we're getting a dip. After the dip, we will be bouncing into September, and from September into the elections, we are going to get another very large decline. So that's your wider view. And again, it comes down here onto the QQQ. QQQ is into 15 trading sessions. So quickly over onto your charts. Again, wide view from what we're looking at over here on the SPX. Very possible. 5405, 5414 as to what I'm looking at from right here. Bring you into the zoomed in version as to where we are at present. Thanksgiving preferred. And again, here we are looking very clean with a 200 extension. I know I have, but I need to move upwards to be able to see it. Again, 5350, like we've mentioned and like we've discussed. Gap to be filled from last week. CPI, gap to be filled from the prior weekend. Gap to be filled from the jobs report. And here we are. Removing that, and actually I will leave that for a second and bring you on to the count that I've been looking at. And again, possible. getting up there to that 53.50, 53.65 area. Very, very possible. And then after that, you get what you get. Now, in your email, you have a chart which was shared to me by one of my colleagues, and I asked his permission. And he said, absolutely, if you'd like to share it, you're more than welcome to share it. You'll be looking at the chart of what he has for where his projection is. And again, you'll understand the bigger, broader, wider view. Looking over here onto the JP Morgan, and again, JP Morgan having now achieved 118.35% off of the October 2022 lows. I've got this counted very clean. 1, 2, 1, 2, 3, 4, 5 being the 3. The recent drop over here early in the year into the 4, or sorry, off the recent earnings, and an ABC from what I can see right now for the 5, which ends the entire run. Now, there is no violation whatsoever until you start taking out these prior lows. Prior low over here from early in April, and the high over here from back off of earnings in January. Start breaking down there and start breaking down here down below this 157. And then you can start to say that, yes, JP Morgan's top has been placed and it's going to be way too late to get in front of that anyway. And I am not trading JP Morgan. QQQ. Looking at our QQQ, our most important, our most significant, coming off of that April bottom, AB 1, 2, C 3. You could not match up more Fibonacci extensions if you tried. 454, 455, 454, 454, 455. Everything lines up. Look at your chart patterns. Discuss your chart patterns. Do what you would like to do with your chart patterns. It's all right here. All of it is right here, and so is your full moon. So I leave you off here with the IWM. The IWM being absolutely nothing but a slow fade to the upside. Again, until 207 is broken, that is your bottom. Same thing like the SPX 5286 and the QQQ, whatever it was I mentioned, 450 in the chat room. So I want to leave you here with the bread and butter of the United States economy. And that bread and butter is the Dow Jones Transports. How you get all of your goods from one place to another. And here in white, you have your 2024 open. And you ain't looking so swell over here. Here's your April bottom. Anybody who has any kind of chart techniques can be looking at this and saying, this is in big trouble. And your Dow Jones Transports no longer have to ship anything to Red Lobster. They will soon no longer have to ship anything to Applebee's. And this was also the reason why Wendy's took a very significant hit as you went into yesterday. And the same thing happened over there with McDonald's. So if you can't eat and you can't get your food to the places where you do eat, then why not just buy AI? Because everything on the planet is all going to be AI, 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 AI. And let's get on our knees and suck as much NVIDIA roaring kitty cucumber eggplants as you could possibly want to. And I wish you the best of luck trading NVIDIA's earnings.